Open the show to you and your questions, as many of you trade in the land of the small. So if you've got any shares you want to know about, please do text us at 33814 or email us at smallcaps, one word, at summit.co.za.
So don't miss Spotlight on Small Caps every Wednesday at 8:30 p.m. and again on Fridays at 10:30 p.m.
A new player has entered into South Africa's investment industry and is promising, among other things, to create an attractive opportunity for investors. VICI Private Equity Fund plans to offer investors of A-class preference shares capital protection and favorable returns. To break down the detail, I'm joined in studio by the fund's CEO, and he is Jaco Maree. Thank you so much for joining us.
Hi.
Now, Jaco, you say you will offer competitive dividend earnings and capital protection for investors. Now, capital protection, that name is extremely tempting and I suppose comforting for the investor, but this is not an offer of a guarantee, is it?
No, definitely not. We at VICI Private Equity Fund, we see a lot of opportunities out in the marketplace at the moment. We've put together a very unique structure, we believe the first of its kind in South Africa, and even when looking at other ventures in internationally as well, that any investor investing in A-class preference shares in VICI Private Equity Fund is issued with or purchase a promissory note issued by Nedbank Limited and issued directly to those investors. In other words, it means that the capital any investor invests into the fund is, I wouldn't use the word underwritten, but it's supported by the promissory note, which is completely independent of the fund or any of the fund's performances.
Now, I was asking about capital protection, reason being that some analysts will argue that it's not always the best option, particularly because one can actually just achieve the same objective, by putting a lump sum in, for example, post office, a monthly income scheme, and using then the interest income to start a systematic investment plan in a diversified equity fund. So just how protected is this?
Yeah, the private equity investments in unlisted companies, or the shares of unlisted companies, is normally associated with a higher risk, but the returns are also greater. We've looked at that scenario and say, how can we attract investors, protect their capital as far as possible, but still offer those investors the opportunity to participate in the higher returns when compared with listed shares or equities, still offer the investors that upside when investing in private equity. We've approached a couple of financial institutions. Nedbank Capital came back to us with a very unique structure in private equity, that promissory notes are issued directly to investors. After the investment period of 10 years, it does not matter what happens with the fund, the capital is paid directly from Nedbank Limited to those investors holding A-class preference shares.
Can you exit before the maturity of the term, or is it a case of if you want to exit before this, then one would have to sell the shares on the stock exchange? How does that actually work?
Yeah, the shares of the private equity fund, the preference shares, is not listed on the exchange. The investment period is for 10 years, which is the normal period in some cases in private equity, longer periods. So that is the normal investment period in private equity. There is the option for the investor holding the promissory note to approach Nedbank and let's call it sell that at an earlier date than the maturity date, and that would then be at the market value of that promissory note on that date.
How easy is that? Because one of the big questions, and I suppose around African private equity, is the ease of actually exiting, when to do it. Just how easy is that going to be?
The investors up front would know it's an investment period for a 10-year period. The various portfolio companies that we have there's various stages that we would invest into a company, specifically after a stringent investment criteria has been followed, due diligences have been done, and the investment committee have approved such investment in that company or in that project. Then that company would be grown with, of course, our input, as well as the teams that we put in place for those investee or portfolio companies, up to a stage where that company has reached its maturity value or stage. It might be after 10 years, it might be after 5 years, it might be even a longer period, whereby we would then on-sell those companies or exit from those investments, and then to exit from those.
Let's talk about the returns. Between 15 to 35%. Now, some would say that's quite overly optimistic, given the high volatility in equity markets at this stage.
Yes. Please don't compare private equity with listed equity. Listed equity completely different, a different market, different asset class. When looking at private equity funds in general in South Africa, between 10 and 35% is the general return experienced by investors in the South African context. We would rather under-promise and over-deliver. So on returns, what we're guaranteeing to investors is a 7% fixed interest payable per annum from year one, and then any investors in the preference shares of the fund, a further dividend participation based on the performance of the fund. We know the potential of the investee companies and the growth and return potential, but let's rather deliver.
Absolutely. And now let's go to the diverse portfolio of investee companies with significant market value. I'd assume that there is actually a place for smaller companies, and yet you'd find that very few private equity funds want to get into that space, into the small, medium-sized enterprise, but you're getting into it. So what's the attraction for you?
Yes, we as the VICI Private Equity Fund already own a portfolio of companies across various sectors, communication, construction, IT and financial services. With the 2 billion that we plan to raise from the 1st of August onwards through a private placement memorandum, a significant portion of that will be invested into the existing companies that we've seen the historic returns and growth being excellent, and just accelerating that growth to grow those companies to on a national basis. Further on, a majority of the capital is already identified or targeted for companies in various sectors, mining and resources, infrastructure, property, basic industries that's not really dependent on any fluctuations in economic activity, but basic services of the South African and SADC countries' economies.
So South Africa, the SADC region, any plans to move further, whether it's East Africa, West Africa?
Potentially, not our plans for the immediate future, but potentially. If an investment opportunity is attractive enough in other regions or other parts of the world, yes, we would consider those, but our focus is SADC.
Now, you spoke about those sectors, construction, financials. The one issue I think about Africa has been that a lot of investments go through mining and the oil sector, and yet we've got one big resource, and that's human beings. That's the people on this continent, and perhaps there's a need to move into consumer-related sectors. Something that you'd consider going into?
Yes, most definitely. Especially with the problems that's currently experienced in Europe, the Americas, China's economy that's slowing down. Africa is the next growth area or the continent for economic growth. We fully want to exploit that in the sense that we want to take advantage of those opportunities, identify great companies, whether small, medium or large, with the potential for turnaround or rapid expansion or growth. We've already seen that, and there's so many opportunities out there. We're passionate about business, analyzing businesses, investing in those and growing those companies.
Well, good luck with that one, Jaco. Thank you so much.
Thank you very much.
Right, that was Jaco Mare, and he's CEO of VICI Private Equity Fund. Thanks for watching.